by the bottom line. We've not been able to give an update last week due to some time constraints. However, we're back with one good update. We're going to cover two or three things in this update. One is what are the structure of most of the key indices that are there. Uh, how is the bond market doing in terms of the yields? And finally, I do want to cover uh, what the Reserve Bank of India uh, was able to convey as part of the monetary policy, and a quick take on what inflation looks like and what is a view from the Apex Bank. So if we look at some of the key indices, Nifty, if you remember, 2 or 3 weeks ago was in a bearish and undecisive zone. But if you see now, the highs have been taken out. That means Nifty is back in the bullish structure. The same is going on with Sensex. It's back in the bullish structure. So all these dips, if uh, you are, an aggressive investor, or if you are someone who believes in putting money during dips, then these are good places to buy Nifty Bs, Bank Bs, any ETFs uh, that could be available at that point. Even if you look at the most, from the highest point here to here, if you look at the range, this is about 5% returns in less than 3 weeks. So uh, if you look at the same in Nifty from about this point to this point here, it's the same about 4.8% return in 15 odd days. Now that is not less, looking at the risk you're taking with bees. So those things can be done. I'll come to the bond market later. So if we go to Bank Nifty, the structure has shifted back to bullish. Once again, this was the high that we were tracking. CNX Finance, the same story. This was the high that we were tracking, and it has gone back into the bullish structure. Nifty Auto continues to be in a bullish structure. If you see, this low was never taken out by Nifty Auto. CNX PSC is also in a bullish structure, no change. Metal is stuck between this and this, which is a very big range. So there is a lot of consolidation going on despite Nifty moving higher. If you look at Realty, again, it's in a very big range. CNX Energy has continued to be bullish without a doubt, along with Nifty. PSU Banks, same very big range as compared to the other indices. Infrastructure is bullish, FMCG is highly bullish, CNX IT 100% bullish. We don't have to even look at the charts for that. Pharma also. What I am seeing and which I'm continuing to see in the past few days, like I've said, uh, if we see the key indices which are high risk are not making new highs, especially if you see Bank Nifty, finance, auto, metal, realty, these are not making any new highs. The only two high risk sectors that have made high is energy to a certain extent, and I think energy is the only one. But if you see, the markets are being taken higher, which is, if you see, broader Nifty is being taken higher by the less, the low beta sectors, which is something like FMCG, IT, and pharma. This is a typical structure where I think that that the money is moving from uh, the high beta sectors to low beta sectors, which is fine. Companies that do well will never be bogged down by any of this, right? So I have shortlisted a few companies, and I see that they are doing extremely well, irrespective of where Nifty is and what is going on with the broader index, right? But broadly, if you see, the structure is something around low beta sectors performing better than the high beta sectors. If we look at the bond market, and I'll slightly shift to weekly because looking at daily is not great, with every rise in the equity markets, the bond markets are failing to make new highs in terms of yields. I don't really appreciate that structure. As I've said earlier, also, it is slightly. contradicting for me in terms of the macroeconomics not supporting the broader growth. Uh, I have seen times like that, but I do feel this time it's slightly more extreme in terms of macroeconomics not matching with the broader markets. Again, the index can continue to go higher. We cannot call where it will stop at where it will start falling, right? But I do know that the bond markets are showing signs of movement of funds from equity to bonds. So the best I can do from my perspective is I can be a little more cautious than usual. Uh, or if you're a very, very long-term investor, like maybe 20 years, you're not going to look at your funds, or if you buy a stock, you're not going to see it for 20 more years, then I think none of these factors or none of what I say matters. Uh, but just looking at what is happening right now, I don't see a very uh, healthy structure in terms of the broader market. Now, let's take a quick look at what the Reserve Bank had to say in the recent monetary policy, because they made 4 or 5 good and important statements which fortify the country's stature in terms of the inflation handling and the future growth path. So let's take a look at that. So if we look at the report that came out for the monetary policy, this was on between 6th to 8th August. Important things were that the repo rate was kept unchanged at 6.5%. Most important is withdrawal of accommodation has been continued to stay. There were votes against it out of the 6 votes that the Monetary Policy Committee has, but out of those 4 votes continued to be for withdrawal of accommodation, which is a good thing in my opinion. I think the focus still continues to be lowering of inflation. Uh, I think from the Reserve Bank findings, I think the total area sown as compared to previous year in terms of Kharif sowing has increased by 2.9%. It is not very high, but I think a good sustaining growth is also important. So we've had a good Kharif sowing. We've had good rainfalls this year, especially in the important parts of India where it matters the most to have good, good harvesting at the end of it. Now, 2 things that are a problem for Reserve Bank and they continue to be a problem is that the headline inflation uh, has been at 5.1%. Now, although this is a slightly older number, but uh, if you see the current numbers have come down I think it came out in August, I think around 12th or 15th August. So it was after the monetary policy. The numbers have come down to 3 point maybe 8 or 9%, which is a 5-year low in terms of CPI inflation. So maybe, just maybe, the interest rates that were increased from a couple of years ago have now started to kick in and they've now started to impact inflation in a more favorable way. Uh, as I have said before, and you all are aware that the monetary policy actions do not work immediately on any economy. There is a lag uh, for any economy to really adjust according to the monetary policy action, and the lag for India is close to 12 to 15 months. So if interest rate reduction or increase is done, the impacts of that you will see only after 12 to 15 months, or even more in some cases if the transmission is not that quick. And also, as you know, we are not an efficient economy in terms of monetary transmissions, so it may take a little more time. So I do see that the effects are now coming, but we'll have to see how the inflation numbers are for the upcoming months. Do they continue to stay low? If they continue to stay low around 3 or 4% for the next one odd year, that would give us a little bit of hope that the Reserve Bank will start thinking about accommodation and further rate cuts. But like I've said, I don't see rate cuts coming. At least a year from now, I don't see rate cuts coming uh, at 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 a very good stage. So we are, I think, poised to remain around 6.5% in terms of the repo rates. Will that hit growth? To a certain extent, yes, but is growth important at this stage when you see inflations at such high levels? In my opinion, no. And same is the case with Reserve Bank. They do not believe that uh, it's only growth that is important at this point. So I think apart from that, two important statements I think that they've made is the MPC stays resolute in its commitment to inflation to the 4% target. And the most important words to use here is on a durable basis, which means they want to continue with that stance, right? And if you see the other statement in green, that's way more important, is enduring price stability gets sets strong foundations for a sustained period of high growth. That's where we want to get to. So we don't want to be hasty in terms of just focusing on growth while letting inflation go, right? Uh, a lot of other things will also matter in terms of inflation is how the government policies are to offer storage of grains, storage of other important pulses that are important, how the export policies are ensured that the inflation within the country does not rise. All these things will make a really big difference to our broader economic stature at this point. To summarize, I think um, the economy is at a good stage. I won't say at a high growth stage. I won't say it will sustainably uh, grow at the same percent. We will grow, but there will be headwinds in terms of how inflation turns out in the next uh, few odd months, and that will determine where the policy structure will go. I think that's about it. I do want to cover a few stocks that I did come across in the past 2 months where I have been an active investor, but I want to make sure that I release those stocks publicly after a couple of months. Reason is that I do not want to influence your decisions to buy or sell something just because I have made a video out of it. So there will be a lag, but that will still teach you how to pick stocks in the future. Uh, Now that may not be uh, a bring it all kind of setup, but it will be based on quick check on fundamentals and you can decide if you want to invest or not. So I'll make a separate video on that to be released soon, but it will definitely, please take that as it has come with a lag and it will never be a recommendation from me to buy or sell. It's completely upon you to press the buttons to make sure you are able to understand the risk behind it. As usual, I wish you good luck and good investing. Bye bye.